Hello, everyone, and welcome to episode 4 of Retail versus Smart Money. I've got a sale on my trading course at the moment. You can save 30%. You get full access to my trading academy, my community, and personal support from myself as well. So, if you want to improve your trading and you want to become a full-time trader, get funded, and join $2,380,000 worth of funded students, head over to the link in the description and you can sign up there. Hi guys, and welcome back to the Retail versus Smart Money series. In this video, I'm going to be breaking down EURGBP from a retail point of view and a smart money trading point of view. Now, this one's going to be a little bit different because this is one of those opportunities where the basic retail way of trading with support and resistance, trend lines, chart patterns, etc., actually worked more than the smart money approach and allowed you to catch more trades, right? So I wanted to do this video to highlight that smart money is not a cure-all, okay? If you are trading a smart money approach and you think you're going to be a wizard of the markets, you're going to catch every single move, it's not right. It's not true. Now, sometimes obviously support and resistance will be prevalent, it will win over smart money that may not give us entries, may just totally miss our opportunities and leave us waiting for moves that we're never going to get. So it's kind of the contrast between the smart money, supply and demand, order flow focused way of trading and the basic retail lines on the chart way of trading, right? Sometimes that works. There is no right or wrong strategy, and I wanted to make this video to highlight that because I think people think that smart money will cure all your trading problems, and retail, if you just leave retail behind, basic retail patterns, you're going to become a winner straight away. It's not like that, and this video will highlight that for you. So really quick, before we dive into the analysis, let's have a look at the different meanings between smart money and retail. When I say retail, I mean basic trading patterns, most prominently being support and resistance levels. These invisible levels that price bounces off either way. Now, this is obviously a very basic retail way to trade. And in smart money, it's seen as a kind of liquidity area. So it's totally the opposite in smart money trading. Another thing in retail will be trend lines. This is a big way that a lot of basic retail traders trade. And obviously, once again, this is seen more so as liquidity in smart money trading. Now, obviously, chart patterns as well, but they don't really come up in this video, are also basic retail ways of trading. Things like head and shoulders and, triangle patterns where we squeeze within the range and then break, retest, and go. So this is the basic retail way of trading. As you may know, if you're a viewer of my videos as well, a lot of these things do not work very consistently, but obviously they can work sometimes, and they will work sometimes. And this video is kind of a testament to that. So when I say smart money, I'm talking about things like demand zones and supply zones, so areas we may react from in line with the order flow of the market. I'm talking about imbalances as well. So this large imbalance area here, we're going to come and pull through that, fill that inefficiency, then move away. I'm also talking about trend structure as opposed to trend lines. So when we get a move up like this, rather than looking at the trend line that's holding price up, we are looking at the breaks of structure and the actual real market higher highs and higher lows. So in a nutshell, that's the difference between retail and smart money. Let's dive into the analysis for EURGBP. I'll break down what it is that I missed. I'll break down where I was looking to get in and how the retail approach kind of prevailed in this specific instance. So this is where we were, and what I'm going to do first is show you my plans, where I put my entries, my whole plan basically for getting into this trade. Then we'll go over and we'll look at the retail way and how that would have been more successful in this instance. So basically what I'd seen was EURGBP hit a major supply zone. Then we had a break of structure. So I was actually looking for shorts on EURGBP. And I was at this time looking for swing shorts, very, very large swing shorts through a daily range for, 700 plus pips. What I was looking for at this point then was a pullback, right? Because we've had here slow momentum, a spike, tap into supply, and now a strong momentum sell-off, which has obviously showed a lot of weakness, taking out this whole range within around, 3-4 hour candles, as opposed to the week that it took price to get all the way up here. And if we consider it as kind of a Wyckoff view as well, we can see we have this kind of distribution range, spring, breaker structure. So now we'd be looking for a pullback to then sell off. Now, in order to get the sell-off that I wanted to see, I wanted to first of all see this imbalance filled, right? We've had this large imbalance come in simply because of the very fast sell-off. So now we have this inefficient price area. So what I would do from this point is then mark up this supply at the top, and that is where I would want to see price return to. So my orders would be something like this. And then the trade would obviously run down towards, larger targets. Let's say this one for now, although it was a larger target than that. And that is kind of the trade that I'd be looking for, right? All I would want to see is very simple price action to come and fill that inefficiency in the market. And then when we hit this point here, we can then look for the rollover and big sell-off down towards that major target. So that's what I planned to see. That's what I'd hoped to see. But that is not what we saw. What we saw instead was a little range form here, and then a sell-off occurred down towards this point here. Now at this point, I was still interested in seeing price push back up into this range. So what I began doing was looking for kind of buy to sell move from this range that we're in down here. So once we'd hit this area and started pushing away, I wasn't interested in getting straight into a trade at this point because it would have been too risky. But what I did want to do is then see how the market would react, to see if we could push up a little bit. And if we could then look for buys up towards the high up here. Now, this little range actually for me added liquidity, right? So when I saw these three very near equal highs, so we got relative equal highs there, that kind of gave me the idea that this is now a stronger area to come and push through to trade into our major sell point. So I'm going to remove that for now, but just remember we have sell idea from here. And now we're looking for a buy to sell idea. So at this point, I'd seen a price push up, form this small range, then have a break of structure, as you can see here. This would be the BOS. And now what I would do is look for a buy. Now for this, I was looking for an extreme pullback towards the demand here. So I was looking for price to come back to, I'm just going to use fib for now. I don't want to shoot around the time frames too much. Yeah, come back down to the demand around this point here through this imbalance to then come and get me in on a trade. We then formed equal lows, and this gave me more confidence that we were going to come and push down towards the zone. And then after making the equal lows, we pushed up. I saw this as a sweep of equal highs. I was then anticipating a sell-off to the downside to come and take the liquidity the other side as well. So I was actually expecting a movement like this. Then when we hit this point, we could look for the sell-off. That is what I expect to see from a smart money perspective, because this is what works for me, right? You got to remember, it's not that I'm just, throwing random things on the chart here. This is what works for me 90% of the time. But this is one of those examples where it didn't work out. And actually the retail approach took the crown for this one, which is why I'm covering it, because I think it's useful to show you both sides of the market. So I was looking for sweep one way, sweep the other way, tap us in and run. Works very nicely. That would then take out this equal high liquidity, fill this imbalance and fulfill this supply. Then we could look for shorts from there. Now what you'll actually see the market do, if we let it play out, is buy straight up, not quite hit that zone, leave it open a little bit, and then come down. Now at this point, what can we see? Well, now we're forming a bit of trendline liquidity, right? We've had 1 tap, 2 taps, 3 taps. So what we could anticipate now is maybe the price to come down towards the trend line, liquidate, move towards this demand zone here, and then make a push up. So this was my next kind of plan of action. And I was looking for confirmation entries from here. And then I had a buy limit order set on here in case we did come and liquidate those equal lows as well. So this was my idea at this point. But if we let it run, you're going to soon see that that's not what happened. We once again retested and respected the trend line. And then after a small bit of liquidation here, we did go and trade it towards that sell area. Let's quickly break that down then. This is the only area where standard retail buyers really got messed up in this one. But aside from that, everything worked perfectly for the retail buyer. Now, fortunately for me, my missed opportunities did not lead to losses, as you can see. I have a very passive approach to trading. I'm never rushing into markets. So even though I missed ideas, I never took a loss on this whole, this whole formation. But it was like a month of back and forth, just missing setups, missing setups, missing setups. So it was a little bit frustrating. Now, if we had to break down everything we've just looked at from a retail perspective with trend lines, support and resistance, all these things, the results obviously would be a little bit better, quite a lot different. So let's have a look at it then. So my first plan was actually a sell from this point. I saw this as liquidity and I was waiting for price to come and push through the liquidity and imbalance, hit the sell and then move down. Now, if we clear these off for just a moment and look at this from a retail perspective, what's this here? This is a support, okay? The support breaks at this point and then it becomes a resistance. So sellers would actually be looking to sell from this area, right? Stop losses, it's iffy to find stop loss placement for these kind of traders, but that would be generally the idea for the trade. Now, there is also a support down here around this point, right? We can see this area, this area, this area all reacting together. So that is basically a retail trade done for you. That's a 3.24R trade. Now, where I saw liquidity here, they would obviously see support and resistance, right? So first things first, let's just clear all of this off. First things first, there's quite a few opportunities here for retail buyers. So kind of intraday retail buyers would have seen maybe this resistance point. When it broke, that actually formed a support point, and that could have been a buying place for retail traders just towards maybe the high of this range. Now maybe obviously the first trade wouldn't have worked, but there was then a second opportunity pushing towards the high of the range, which could have also offered you a nice trade. On the flip side of that, this would not be seen as liquidity, this would be seen as resistance. So this whole resistance area here would be a prime place for intraday selling from there, to obviously bring the market down. So there's obviously about another 2 trades potential there as well. Now here, where I saw equal lows, this would have been seen as a support. So this one obviously didn't really give any buys because we probably would have needed a third tap in order for retail buyers to actually get in. Unless, of course, they went in maybe with an engulfing for kind of a larger swing move or something like that, using that support floor and maybe using, I don't know, this resistance as a target or maybe a resistance way off in the distance. But you can see there that basically they had opportunities to buy, opportunities to sell, and then maybe an opportunity again to buy from this point. Now, one of the big ones for me, and this caught me out, was, as mentioned, after we pushed above this level here, when we had this big impulse, I was then looking for the pullbacks to bring us towards this demand zone, or potentially that smaller demand zone that I'd marked out there. But as you can see, what we did instead was react to resistance turned support. And we reacted to that level massively all the way until we blew through the roof. So we had basically one opportunity for buying there, one there, one there, one there, and one there. So there's like 5 or 6 opportunities there to actually buy the market using retail perspective. Now, obviously, 5 or 6 opportunities is brilliant, and I missed every single one of them because it's totally different to how I trade. And to me, this looks like a level that's going to give way soon and bring us in towards kind of a better buying area for me. So you can see how there's massive contrast and massive conflict between the 2 strategies. One of them sees this as a great place to buy. One of them sees this as a terrible place to buy. Now, if you do buy from this level using the retail approach, sure, quite a lot of the time, this level's not going to hold and you are going to get pushed through, you're going to lose. But in this example and in, examples all around the markets, this will work just fine. So this is kind of me showing you the contrast as to if you're taking losses and you're thinking, oh, why is my, smart money approach not working? This is why, because it's not going to work all the time. No strategy is bulletproof. No strategy is going to work 100% of the time. And that's just that. You've got to accept that or just quit trading. So the final thing to mention then, aside from the, selling opportunity down, buying opportunity up, selling opportunity down, buying opportunity up, and then 5 more buying opportunities up as well, there's also a trend line. Now we know after the second tap, a trend line is confirmed. Usually after a second tap, we get a liquidation. Now we did see a liquidation on this one. So this is about the only thing that played into the hands of, smart money kind of traders. But we also got, after the 1, 2 taps, a buying opportunity here, buying opportunities all the way here as well, bringing us up towards resistance, right? So this would have actually been quite a clear target as well. So we would have seen buyers coming in, around these levels, for example, into there, and then all the way up through this price action, all towards that resistance. So there's even additional buys kind of hidden in the mix there as well as obviously this liquidation, which even though it did liquidate, there was, push down, sell off, kind of a tricky one. There's still obviously selling opportunity from the trendline break down to the support, selling opportunity from the trendline break down to the support before those buys then came in. So really, this is like a retail trader's dream. This is like perfect price action, 100% perfect price action. If you're retail trading, following support and resistance and trend lines, you had a world of opportunity going on here. Whereas for smart money traders or for supply and demand traders like me, all I did was sit and miss a bunch of moves. I hope you've enjoyed today's video, Retail versus Smart Money episode 4. This one was really made to highlight that there is not one winning strategy. There are multiple ways to win in the markets. Now, you can approach with smart money approach, you can approach with a retail perspective. You can do well either way. It doesn't matter how you trade as long as you stick to one system and really get it to work. Now, personally, I prefer the whole supply and demand order flow following methods. But if you are finding success with trend lines, with support and resistance, all these things, keep at it because you can find success with any system, even if some, have faded out a little bit over time. So thank you for watching. I hope you've taken some value from this video. If you have, head over to my channel. I'm sure there's going to be even more videos there that you'll find value from and enjoy watching. So thanks for watching, and I'll see you in the next video.